For about 5 years now, the advice to what should I invest in has mostly been just buy the S&P 500, buy America, don't overthink it. So here's the bit nobody told you. Last year, the boring old FTSE 100, essentially the UK stock market, quietly beat it. The FTSE was up around 21% in 2025. The S&P 500 did about 17%. The underdog won, and it was the FTSE's best year since the rebound after the financial crisis. But before you go moving any money around, stick with me, because what actually drove that result is not what most people think. Just a quick reminder, nothing in this video is financial advice. It's purely for educational purposes, and you should always do your own research before making any financial decisions. One of the most dangerous things in investing is one brilliant year. Right now, there's real excitement about the UK, and I have some friends who talk about increasing their allocation into UK stocks because of it. But that's textbook recency bias. You're assuming whatever just won keeps winning. The reality is, one good year tells you almost nothing about the next 10. So why did the FTSE actually win in 2025? The thing is, it had almost nothing to do with the UK economy being healthy. It came down to three sectors riding three global waves. 1. Defence. Stocks like BAE Systems and Rolls-Royce had a storming year, but that's the world feeling more dangerous and defence budgets rising, not UK brilliance. 2. Gold and silver. 2025 was a monster year for metals. Gold up around 65% and silver up around 144%, which turbocharged London-listed miners. But a lot of that was fear and people scared of missing out, not economic strength. 3. Banks. They cleaned up because interest rates stayed higher for longer, which fattens their margins. Add it up, and the UK's big year was defence, metals, and rates catching global themes. The economy itself barely grew, about 0.1% in the third quarter. So this wasn't the UK turning a corner, it was three sectors catching three waves. The entire FTSE 100, all 100 companies, is only about 4% of the global stock market. So when we crown it for beating the S&P, we're cheering a tiny 4% slice that had one great year. Zoom out from 1 year and the picture flips completely. Over the last few decades, the S&P 500 hasn't just beaten the FTSE 100, it's left it for dead. And here's the kicker for the FTSE. Strip out reinvested dividends and most of its long-term growth basically disappears. Almost the entire return came from those dividends being reinvested. Which actually tells you what each index is for. The FTSE is an income index. It pays you, with a dividend yield roughly double the S&P's. The S&P is a growth machine. It reinvests and compounds. Different tools for different jobs. Here's something most people never factor in. Markets move in long cycles. There are stretches, sometimes 10 years plus, where US stocks dominate everything. Then stretches where the rest of the world has its turn. The current run of American dominance has gone on a long time, longer than the historical average. Does that mean it's about to flip? Honestly, nobody knows, and anyone who says they do is guessing. But that uncertainty is exactly why betting everything on the recent winner is so risky. There's another hidden bet inside all this that catches people out. currency. When you, sat here in the UK, buy an S&P 500 tracker, you're betting on the dollar too. If the pound strengthens against the dollar, that quietly eats your US returns, even when the shares go up. Funny thing is, it cuts the other way for the FTSE. A lot of those big UK-listed companies earn their money abroad in dollars, so a weak pound actually flatters them. You can't escape currency. It's always there, working for you or against you. So here's the way I'd want a mate to explain the whole thing. Chasing last year's winning index is like backing whoever won the last race to win every race. But the S&P and the FTSE aren't even running the same event. One's a sprinter, explosive, brilliant on its day, can blow up. The other's built for endurance, grinding miles, paying you along the way. A serious athlete doesn't pick one and bin the other, they train both, because they don't know what the season will throw at them. And that, genuinely, is the answer for most people. You don't have to pick. So what should you actually buy? My advice: the lowest effort move for a lot of UK investors is a single global index fund that holds both, plus basically every other major market on top. A global tracker. One fund, thousands of companies, America and the UK and everywhere else, sorting themselves out automatically. When American tech is flying, you're in it. When the FTSE has a year like 2025, you're in that too. When leadership flips somewhere else, you already own that as well. You stop trying to predict the winner and just own all of them. That's not settling for average. It's removing the one decision people get wrong most. So, S&P 500 or FTSE 100? The honest answer is the question's a bit of a trap. The S&P is your growth, the FTSE is your income, and the UK's 2025 win was 3 sectors catching global waves, not a new golden age. For most people, quietly owning the whole world in a global tracker beats trying to be the genius who calls it right. Because the investors who do best aren't the ones who pick the perfect index. They're the ones who pick something sensible, keep fees low, and keep showing up month after month. Consistency beats genius. It nearly always does. If this video helped at all, hit that subscribe button and I'll see you in the next one.